This is the 2019 pre-paper. It's a company accounts question, Hill Limited, and this is the 8th adjustment. So in this adjustment we have a creditor who was owed 12,800, accepting office equipment with a book value of 11,600. So we'll get to that straight away. The book value should jump out to you. Book value is different to cost. In full settlement of the debt, the office equipment had a cost of 16,000. No entry was made in the books in respect to this transaction. Provide for depreciation on office equipment held at the end of the year at 20% of cost. So a creditor was owed money and they accepted equipment in full settlement. First thing I'm going to do is the creditor's account. Creditor's account, the balance in the creditor's account from the trial balance is creditor's account here. So there we have a creditor's account is 87,500. So 87,500 is the balance in the creditor's account. Now what have I done? Now there may be other adjustments for creditors. I'm just looking at this one, so I'm not going to total up the creditors. I'm just looking at how I deal with this one. A creditor was owed 12,800. They accepted the equipment in full settlement. That means a creditor is someone we owe money to. If they accept something in full settlement, that means the debt is gone. That 12,800, we no longer owe them a penny. That debt is gone. So I'm going to cancel that debt off. So cancel full settlement. You can say whatever you want there, to be honest, it doesn't really matter. Cancelling in full settlement, and what happens here is I have to take out the full 12,800 because the debt is gone. That's the most important part of the thing. You can divide that if you wanted. You could have said 11,600 and 1,200 to show that 11,600 came out of equipment. We'll get to the 1,200 in a second. I'm just cancelling that because I just want to take it out as the easiest way possible. That's the debt I owe everybody, 87,500, and I no longer owe this person 12,800. That's gone. Okay, what else happened? Well, I had equipment. Equipment has a book value of 11,600, the net book value, but it costs 16,000. I need to find out whether I made a profit or loss on that equipment. How do I do that? I do a disposal account. I'm trying to find whether I made a profit and loss on the equipment that I sold. The cost is 16,000. We see that at the top of the question. Now, it has a book value of 11,600. They don't tell us anything about the depreciation. A book value means that's its worth after depreciation. So how do I find how much depreciation it had? 16,000 to 11,600. How did that happen? Well, we obviously had depreciation, and that depreciation must have been 4,400. 4,400. Okay, we'll get to that in a second. That's depreciation, cost, depreciation, net book value. So it was worth 11,600, and we essentially traded that equipment in for a debt of 12,600. So the debt was 12,800, and we gave them something worth 11,600. That means we were let off money because it was worth 11,600, but it managed to pay off a debt that was 1,200 greater. What happened? I owe somebody 12,800. I'll give them something worth 11,600. They've let me off 1,200. They have given me a discount. I have therefore discount received. I no longer pay that 1,200. They've let it off. It's a form of income, that 1,200. So what do I do next? I do a discount account. Just add this in. My discount in the question, see net here. Credit side 12,700. Discount is either a gain or an expense. If it's an expense, it's on the debit side. If it's a gain, it's on the credit side. Okay, so obviously if I receive a discount, it's like receiving money, it's a gain. So this is discount received. You should write that in just to kind of distinguish it for yourself. This is received discount So it's on the credit side. What happened here is I received another discount. So creditor discount received, and the figure from above is 1,200. 1,200. So also credit, let's put in the full credit discount received. So there's another one. I'm not going to total that up because there was more discount in the rest of the question. I'm just going to get rid of this for now, just to give me a little bit of room. The next one I'm going to do here, I'll just write in here CR, and write in here CR, just so we know that they are that they're creditors, basically that they're income, because discount could be on either side. So both of those would be added up. I'm just making room because I have done a disposal account for my equipment. Therefore, I've gotten rid of equipment. So this is no longer what my equipment is in my accounts. This question was a little bit misleading. They talked about creditors and equipment, and that was it. And they never said anything else. When in reality, we had to do a creditors account, we had to do a disposal account, we had to find out that there was discount and do a discount account. Now we need to adjust our equipment. We need to find depreciation for the year for this equipment. We then need to find the balance sheet depreciation for the equipment while taking out this 4,400 because it's gone. And we have to add in the depreciation for the year. There's a lot of accounts, 6 of them to be done off this one question. It's quite misleading. So the equipment account is the next thing we're going to do. Equipment, what was my equipment at the start of the year? Cost 45,000. We're dealing with cost when we deal with something like this. 45,000. So 45,000 is my cost. Okay, so what happened next? We had a disposal. So the disposal, I'm going to take that out. So I'm going to get rid of the disposal. I'm going to take it out of cost, 16,000. That's now gone. So my equipment account, I have disposal of 16,000. That 16,000 is a negative figure. It's gone. So what's left in my equipment account? 45,000 minus 16,000 gives me 29,000. So I have 29,000 that's left. Just going to $29,000. Okay, so 29,000 is left. That is going to go into my balance sheet cost. That's my cost of equipment. Okay, what's left in my equipment? Well, I've done my disposal, I've done my equipment account. Just like any other question where they're talking about a disposal, you've multiple accounts to do. The next one is depreciation for the year. Depreciation for the year, okay. To find that out, the first thing you have to find out is how much they're worth and when are you depreciating them. Providing for depreciation on office equipment held at the end of the year, which is this figure, at the rate of 20%. So there's no depreciation on the disposal for the year. It's just providing for depreciation on the equipment held on the last day by 20%. So that's going to be 29,000 multiplied by 20%, and that's going to be equal to, I've done it already, 5,800. So 5,800, that's going in admin expense. It's admin because it's equipment. Last account that I do is I found depreciation for the year. I found out basically there is depreciation here before this year on office equipment, and I've disposed of something. All that means is we now have to do a depreciation for the balance sheet. So accumulated depreciation for the balance sheet. Accumulated depreciation at the 1st of the 1st was how much? Well, the cost of equipment was 45,000. The net book value, this guy here, was 35. So 45,000 to 35,000, it means there was 10,000 depreciation before this year even started. 10,000. Because that's the cost and that's the net book value. Cost minus depreciation is equal to net book value. 45 minus 10 is equal to 35. Okay, depreciation for the year. I have to add that in. Just done it. Depreciation for the year, 5,800. So I'm going to add that in. What else do I do? Well, I have this disposal over here, and in that disposal we were told the book value and the cost and book value. We had to find out basically for ourselves that there was depreciation in this as well. Has to come out of here. So disposal, and the disposal amount is 4,400. Total that up gives me 11,400. So now I have 11,400 that's going into the balance sheet. I have 5,800 that's going in balance sheet depreciation. I have 5,800 that's going into my P&L for depreciation for the year. I have 29,000 that's going into my fixed assets at cost for equipment. I'm going to total that up. There's another note elsewhere for discount. Obviously discount then, if it's a credit balance, it'll be going in as income. If it's a debit balance, it's going in as an expense under selling and distribution. I have disposal. What happened for the disposal? Well, I got this figure here for discount received, and I put it down here. So that's not going elsewhere, that's just going to this account. And I'd balance my creditors account elsewhere. There's probably another note for creditors as well. Moral of the story is they can give you an adjustment like this, and there's not a whole lot to it, but before you know it, there's 6 accounts. Because if we dispose of an asset, we have to do 1, 2, 3, 4 accounts. They have to be there if we dispose of an asset and there's depreciation. The other part of it was just finding out that there's discount, because you were let off money.